Now let's talk about the investment cycle. So you have a client that has excess cash, and rather than sticking that cash underneath the mattress, they think, I want to try to earn money on my money. So they might invest in equity securities such as stocks, or they might invest in bonds and try to earn interest income. Now, technically, they can also invest in commodities such as gold or silver, but typically on the exam, I see them focus on the equity securities where they're going out and buying stock in the stock exchange, or they go out and buy some bonds. So let's first talk about some of the internal controls that we would like to see as it relates to that investment cycle. And because typically investments are high dollar amounts, we would love to see that authorization, custody, and record keeping are separated. Specifically, with respect to authorization, since it's high dollar amounts that we're usually talking about, we usually want to see that the board of directors authorize that purchase or sale of investments. So usually when you see things that are high dollar amounts, usually that's when we want to get those board of directors involved. With respect to custody of investments, typically you're going to have an independent third-party custodian that holds the actual investment. So for example, if you have ever gone out and bought like a share of GE stock, you don't actually have the stock certificate. That actual investment is actually being held by a custodian such as Fidelity. Now, if for some reason you were to request that stock certificate, or maybe your client has gold, we would like to see that held in a safe deposit box. And when that safe deposit box is accessed, we'd really like to see that two company officials are the ones that can open it, that can access that safe deposit box. With respect to record keeping, we really want a separate employee who is involved in that detailed record keeping, someone that does not have access to the custody of the investments or the ability to authorize those purchase or sale of investments. Now, talking about auditing that investment balance. With respect to completeness, what we are going to want to see is if that entity happens to have a high volume of material investment transactions, we would like to see that the auditor searches for unrecorded purchases of securities by examining transactions for a few days after year end. So again, one way we test completeness is going from the source to the records. So if we're looking at those transactions, that's our source, and going up into that records. And specifically, when we're looking at the source, when we're looking at those transactions, we want to make sure, we want to see if there's any of those transactions that actually relate to the year under audit that really should be included in that balance. Because we want to make sure that all their investments are included on the books when we're talking about completeness. Now let's talk about the valuation and allocation. And what you're going to see is some of those buzz terms that really indicate to you that, okay, this relates to the valuation and allocation assertion. So that first one, we can see we foot a listing of the investments. So footing relates to valuation. So we found that buzzword links up to that valuation. A common thing we'll do with valuation and allocation, especially as it relates to securities valued at fair value, is we'll obtain evidence regarding the quoted year-end fair value by looking at various sources or from a third party. So let me give you an example. Let's say a company has 100 shares of GE stock at December 31st, 2021. So equity investments are accounted for at fair value. So I need to figure out what was that value on that balance sheet date of December 31st, 2021. So I can go to finance.yahoo.com. I can see what the closing value was on 12/31/2021, which happens to be $94.47. If they own 100 shares, then I would multiply those numbers together and I would say, you know what? This investment should be recorded on the books. Its value should be $9,447. So that's how we typically get comfortable with that ending fair value, is we'll compare it to a third-party source of what that value was at the balance sheet date. Another way we can get comfortable with valuation and allocation is we can recalculate the ending value of investments that are not reported at fair value. Again, that buzzword being recalculate. Another thing that we look for with respect to investments is we look to see if there's any permanent impairment, because we wouldn't want an investment to be overvalued. So as a student, when you see questions related to impairment, that typically relates to valuation and allocation. Now let's talk about existence. With existence, you probably are thinking We can do confirmations. And yes, confirmations are a great way to get comfortable with that investment balance. So what we're going to do, we're going to send out a confirmation to that custodian. So for example, out to Fidelity to make sure that yes, they are holding those 100 shares of GE stock. So we want to make sure that yes, we want to confirm how many shares they have. Now, what about those securities, those gold bars that they may have in the safe deposit box? Well, as auditors, if they say they have it in the safe deposit box, well, we need to see that's in the safe deposit box. So we're actually going to examine any of those securities that they physically have custody of. And when the auditor goes in there to actually count the securities, they're going to put that number on a worksheet. And this worksheet is also going to include an acknowledgement by the client that those securities were returned intact, because we don't want, as an auditor, for them to say, hey, there's some gold bars missing, and all of a sudden they're pointing fingers at us. So we want to make sure for sure that they acknowledge that. With respects to rights and obligations, as we've seen before, confirmation is a great way to get comfortable that they have the right to put these investments on their books. So confirming it really is a great way. So if we see Fidelity says, yes, they own 100 ABC, the client ABC has 100 shares of GE stock, great. That's a great way to see that, yes, they have the right to put that investment on their books. Now, with respect to investment transactions, with respect to completeness, one way we can get comfortable with completeness is analytical procedures. And you saw that on the chart before. So we're going to perform analytical procedures. We're going to look at how reasonable those dividend and interest income are. We really want to make sure that all investment income has been recorded. Cutoff. The name of the game with cutoff, make sure things are reported in the proper period. So we're going to look at those purchases, those sales, those investment income right before and right after year end. So what are we looking for with valuation, allocation, and accuracy with respect to those calculations? We want to make sure that those recorded gains and losses are recorded at the correct amount. With respect to understandability of presentation and classification, we're going to look at investment transactions. We want to make sure that it's recorded in those proper accounts. And again, whenever you see those types of questions where we want to make sure things are in the right category, in the right accounts, you've got to be thinking of understandability of presentation and classification. We're going to continue on talking about investments in our next video.